Hello, everyone. Welcome back to my YouTube channel. My name is Brigitte Benson, and I'm your local real estate broker serving Humboldt and Norte counties. So today I have a local lender here. We're going to get to know him and ask him a little bit about the loan process so that it's less scary when you go into it. So thank you for joining us.
Very welcome. Thank you for having me.
Yeah, you're welcome. So go ahead and introduce yourself to the people. Tell them who you are, what you do.
I am matt.anton. I'm a loan officer, a mortgage lender, or a mortgage originator. All those terms are kind of interchangeable. But I help people get financing to buy their home or investment properties, and I love what I do.
Awesome. Yeah, and we love what you do too. So Matt's helped many of my clients, and they've all been very happy with his service. Okay, so Matt, what is one misconception that people have when going to get a home loan?
Yeah, that's a good question. There's a few misconceptions. One, a lot of people are scared to even start the process because they have this feeling that it's going to be way too hard, or that they think they don't qualify because of X, Y, Z. And I'm here to tell you that there's a lot of ways and loan products to get somebody pre-approved for a home loan. Big misconception just off the top of the head is the down payment. Hey, I don't have 20% down. You don't need 20% down to buy a home. We have a lot of down payment assistance options. There's 1% down options. There's 3% down options, 3.5% to 5% down options. So I think that that's one of the big stopping points is people assume that they don't have enough money for the down payment and closing costs to buy. And I am here to tell you that a majority of people do not put 20% down.
Okay.
That is a huge misconception.
That's a good one. That's a great one.
And the process is not hard, you know.
Okay.
Yes, there's some paperwork. It all really needs to start with a conversation.
Okay. And then I have a note here, like, what about student loan? Should someone be scared to talk to you if they have student loan debt?
Nope. Student loan debt is all calculated based on the outstanding balance, or if you have a payment plan, we use that in your debt ratio it's a simple calculation.
Did you use like the minimum payment that they owe each
so
month?
like it depends on the loan program. So some loan programs take 0.5% of the outstanding balance as the calculation for the monthly payment. Most of the time people have a payment plan that we can use and it offsets that. So if they're only paying $200 a month, then that's what we use for the payment calculation.
So you hear that. Student loans, don't be scared to talk to the lender.
Do not hesitate.
All right, so let's talk about the process. And what does it look like when you get someone in for a loan application and to the finish line? Kind of go over that, sir.
So in general, it starts with a phone call, somebody that's been referred from a realtor such as yourself or a past client or somebody who just wants to start the process. We take an application. There's a few different ways to take an application. I have an online app. We do a lot over the phone or in person in my office. So once the application's in, it gives me a platform to work the application and see what a person qualifies for and what loan products they may have available for them, or what loan products I may have available for them. Then we call them and say, hey, you're pre-approved, or we might have to work on some stuff before we can pre-approve them. Either way, it's not a dead-end road. There's always a way. We get them pre-approved, and then in general, they go out shopping, or a client with a realtor goes out to shop and finds their home, and then they want to put an offer in, and they start negotiating on the purchase price. And if they get into contract, then the contract comes over to us and my team, and we submit it to processing, which is we collect the documentation. We collect a lot of documentation up front for the pre-approval, such as pay stubs, W-2s, tax returns, anything that's pertinent to the individual.
Okay.
And then submit the file to processing. The processor looks it over, make sure we have everything for it to be submitted to underwriting. The underwriting process is usually 24 to 48 hours. And that's where an underwriter looks at the file and checks guidelines based on the loan product that we're putting them in. And then sometimes they find stuff that we need more clarification on this, or we need some documentation on this. It's conditionally approved. And then we call the borrower and say, hey, you're conditionally approved, congratulations, but we need XYZ paperwork to confirm some stuff with the underwriter.
What are examples of some of like that paperwork?
A lot of times it's like deposits in a bank account that they want clarification on. If somebody put $5,000 in cash in there deposited, or if there was some discrepancies on a pay stub that, hey, you say you're full-time, but you didn't work 40 hours on your last pay stub. What was the reasoning behind that? Usually it's pretty simple stuff. We scrub our files pretty aggressively before we go to the underwriter. In fact, one of my my processors on my front end team was an underwriter. She's a DE underwriter for 15 years. So our files are very clean when they go to the underwriter. But just, it's a second pair of eyes is what an underwriter's job is. It's a second pair of eyes to look over the file and make sure everything is kosher before we fully approve the loan.
Okay, so you get everything. Once you're in contract, you might get more information from the borrower, and then you order the appraisal. Yes,
so we order the appraisal. My team sets up to where we order 3 to 5 insurance quotes for the homeowners insurance quotes. Those take about 2 or 3 days to come back to us, and then we present them to the buyer to see what insurance is they would like to go with, and then I encourage them to call the insurance agent and talk that out with the insurance agent of their choice. And
so during this whole process, the buyer has 17 days. So when you meet Matt, you get your loan approved, we shop for houses, and you make your offer. Then Matt and me and the client are all working together to have a seamless transaction. So we keep you on the time frame. Matt orders the appraisal for us. So we get the appraisal done. We get your inspections done. He's working on the back end of the loan.
In the first 3 days of the contract, we send out the initial disclosure, which tells you the outlines of the loan, what the interest rate may be if you decide to lock at that time, the title fees, the appraisal is ordered. Usually within 48 hours, the appraiser has it scheduled and is going out. Usually the appraisal is back to us within 7 to 10 days. And to make sure the property is at value and there's the appraiser's job is our eyes and ears out to the property to make sure there's no health and safety risks and that the property appraises based on comparable sales within a certain amount of time, usually within the last 90 days, what's considered the comparables. So if you have a 3-bedroom, 2-bath house, you're going to see 4 or 5 comparable sales with 3-bedroom, 2-bath house on that report. Yeah. Within a same, geographical area.
Yeah. In a good, 90 days back or not more than.
This time of year, they don't even probably have to go 90 days.
Right.
Sometimes it depends on the area. We're a little rural here. So, if it's in the hills, they might have to go 90 days back to get some. If it's in town, usually 30 to 60 days has plenty of comparables for their report.
And so if appraisal comes in above what you're under contract for, that means what?
That means you're walking into equity, essentially. So you are, in general, you have equity. That sometimes people want to increase the purchase price to get seller credit back to help cover their closing costs. Some people like to leave it as is. In general, it depends on the appraiser. Not all appraisers are built the same. So pretty picky on who I have on my panel. I really like my panel, and I don't like appraisal issues.
And they do a good job.
They do a great job, and they're very upfront and communicate with me very well.
So after you get past all, the documents of the buyer, the appraisal comes in good, we kind of move towards closing, right?
Yep.
So your favorite part is probably signing the loan documents with the client. So talk a little bit about that and then how you fund and then.
Yeah, so after the underwriter, we get all the conditions back that the underwriter may want. We'll get clear to close. And that's kind of the celebratory. We are clear to close, meaning there is nothing more that the borrower needs to do. There's nothing more that I need to do. And then it kind of goes to titles, and the closer on our team balances out with title. So we know our exact close date. And then we call the borrower and say, hey, you need to wire $5,000 to title to fund your escrow account so we can close. And then we issue loan documents. And title also has their set of documents that they add to our loan package. And I call you, we set up an appointment to sign. And once you sign, it usually funds the same day or the next day, meaning it funds and records and the house is officially theirs.
Cool. And I love when I get that clear to close email from the lender. That means I'm very close to giving that client the keys to their home. So
we are all working for clear to close.
So obviously he knows what he's doing. If you have questions about the process, please reach out to either Matt or I, and we will walk you through that.
Yep. We make it very easy. I think that's a big misconception is it's a hard process. It's not a hard process. It can be stressful when you're in it, but I have never had a client come back to me and say, I wish I wouldn't have bought a house. It's very important that people understand that. It seems stressful in the moment, but once they close, it's
water under the bridge. So there's a few loan options. Can you just tell us the basic loan options that you do a lot of.
Yeah, yes. There's a ton of loan options. In general, the main three that I see come across my desk are going to be your conventional loan, which is the standard above a 620 credit score. They have 5% down or 3% down, and it's geared towards the cookie cutter loan. That's what we call it. It's conventional. FHA is a federal housing administered loan, which is not to be confused. A lot of people confuse it with like a first-time home buyer loan. It is technically not a first-time home buyer loan. It's a federal housing administered loan. And those have a 3% down minimum. They're a very common product, government-backed loan. VA is another common loan type that I do. I love a VA loan. They are usually very straightforward. The only real difference between any of these loan products is what the house needs to have. FHA is a little pickier, can't have chipped and peeling paint. VA, they want a Section 1 pest clearance. So you have to provide a Section 1 pest clearance by the time of close. And that's not to say that you go into a house and the Section 1 comes back that has a lot of stuff on it. The seller, if the buyer, can fix those items if they want to move forward.
Mm-hmm. And the VA home loan is 0 down, but you can also have the option to put money down if you want to.
I'm doing one right now and he wants to put $65,000 down. Really, he could go into any loan product. VA in general has a slightly better interest rate. Same with FHA, has a slightly better interest rate than a conventional loan.
Thank you for breaking that down.
No problem.
And if someone's looking to start this loan process, what is your advice to them to just get the conversation started?
Yeah, I think it's just that. Get the conversation started. Call a realtor, call a lender that you trust. It all starts with a conversation. Mm-hmm. I find that most of the time, the conversation starts with a phone call and says, hey, my realtor said to call you, or my sister-in-law got a loan from you 2 years ago. What's the process like? And in general, that's how it starts. We go through the process over the phone. We take an application. And usually people in general are surprised that, hey, I'm approved already, and they didn't think they were. So don't hesitate if you think you're your own worst enemy, if you think that you can't get a home loan.
I love that. One last question that I want to ask is, we live in Humboldt County. Yep. We love it here, but what's the reason that you chose Humboldt County as your home base, or you're choosing that
here?
As your home base?
I was born and raised in Eureka. I'm 4th generation Humboldt County. I love it here. I like the area. I like the weather. I like that you can go 45 minutes and get all the heat you want, and then be on the coast and walk the beach. It's a special place. It really, truly is. I enjoy it here.
I love that. Yeah. I always tell people I love the microclimates, because you can be in 100-degree weather and then come down the hill and be in the fog.
Yeah, I think I heard somewhere it's like the only place that you could drive 25 minutes and have a 50-degree span in temperature.
Right.
We live in a special place.
So thank you for doing this.
Thank you so much for having me.
Yeah, I appreciate it. And you guys, thank you for watching. If you have questions about home loans, don't hesitate to reach out. It's just a conversation to get numbers and to get things moving if you want it to move. So it's your journey. It's not ours. We're just here to help you guys and give you the resources to succeed. So thank you so much. I am Brigitte Benson, real estate broker serving Humboldt and Del Norte counties. And
I'm Matt.anton, mortgage lender, helping you to get into your home.
Awesome. Well, I'll put our information in the description, and subscribe for more Humboldt County updates. Thank you.
Thank you, guys.